welcome to another episode of Stock Talk Product Review. I am your host, Mike, and with me I have the dynamic duo that finally showed up, and they are here. Kage and... We got a decent show planned for you today. We have FedEx troubles a stark symptom of a tight global liquidity. There's a little controversy going on because I guess the CEO said everything was going good, and apparently not. It's a good thing I got rid of my FedEx stock last year, boys, huh?
Someone was you would definitely be in the hole if you had bought into it.
Yep. It looks like FedEx announcement, it would be, and you guys don't accuse me of insider trading or nothing. It had nothing to do with that. It's just you stay ahead of the curve, you stay ahead of the curve. I told you guys this was going to happen. I tried to warn you with Cortez and freaking Navarro's warnings, and you guys, and some didn't listen. So there it is.
Probably the most ideal time to get out of it was probably 2021, I think.
When it was at the peak high, yes, because economic indicators were indicating that, but some still would like to believe the Jim Cramers of the world, the Blue Anons on the alphabet networks, things like that. But people like Tyler Durden and Zero Hedge and some other organizations to be named later we can't mention because no one's allowed to think they exist. Said these things were happening. Cortez, Navarro, they called it a long time ago because of what was out here. FedEx announcement said it's withdrawing its earnings forecast, but it says indication that the U.S. Global economies are slowing. Gee, guys, I wonder why they're slowing. Isn't that kind of weird?
I can think of only two possible explanations. One, more people are waking up to the fact that everything is not as what it seems, and they're pulling their money out of the market. And two, they are not necessarily buying as much anymore because of financial hardships ahead.
No one's going to take their family out to buy a sack of burgers for freaking $50 and $60. I mean, some will, but they're refraining from that because they're just not going to do that. They're just going to go cook them at home. FedEx is a victim of tightening global conditions. And you can see the chart from 2002. Obviously, you have the hiccup from 2008. Things are going good, and then down she goes. Down she goes. Now, if some of you are new to this or been under a rock, FedEx is an indicator, an economic indicator on how the economy is rolling. So if FedEx is falling, then the economy is falling. So goes FedEx, so goes the rest of the economy. The delivery company is a bellwether for the economic outlook. It is highly sensitive to global monetary conditions. Such conditions have yet to improve when central banks around the world remain squarely focused on eradicating and elevated inflation, pointing to the most underperformance ahead of FedEx. Goldman's financial conditions are higher and in tighter. You can see how that chart is. Higher interest rates are feeding higher borrowing rates across the board. And we also, which they're not telling you about, not saying that Zero Hedge isn't, but how many of these businesses, guys, are in complete and super high debt operating costs, and possibly some of them could default. We're talking about businesses across the board that they're not mentioning. Those defaults haven't hit yet. What say you guys?
This is interesting in the fact that it's a private company, but it has access to a whole bunch of different flows and how it actually interacts with both the private sector and the public sector.
Is it possible that someone, maybe the CEO, wanted to come out with the information before, back when he said everything was good, because someone told him to keep it on the DL? Is that far of a reach? We're just speculating here. Now, is that possible?
I don't think it's too far of a reach. We don't necessarily know who told who what, to be precise, but it could be just more along the lines of them trying to maintain the illusion that they have control when obviously their slip on their power is becoming more and more evident.
Because we're starting to see, Hog, what's your take on this so far? What's your take on this so far?
I would have to say it's kind of a telltale sign of them losing their grip, I think. As far as how they go from here on out, I think the best thing to do for them is to stick to what they know and don't necessarily go into riskier territory for their business. I mean, you see ups and downs with graphs and businesses all the time. It's only when there's like gradual slopes down that you have to pay attention over the course of several months. And most people don't necessarily have enough attention span to look at the graphs over time.
And I have an interesting take from some people online that's saying that you can't blame politicians. You can blame they think it's the big corporations that are controlling everything, which there's that aspect, but you have to blame some on both the uniparties for the constant spending in the big government, because it's the printing of money. They just think you have unlimited money amount to print, and that's just not the case. As you're seeing, higher interest rates are feeding higher borrowing rates across the board. And while banks are tightening the lending standards and credit spreads are widening, mortgage rates are rising fast too, which puts the squeeze on consumption, with retail sales report for August overall coming in a much weaker than expected. And we're just into August, and the big retail season's coming in Christmas time. I'm thinking this is kind of going to be a cold Christmas for retailers. What do you think?
I think it's going to be a lean Christmas myself. Most people are probably going to be tightening their belts and not necessarily splurging as much as they used to.
And but we're not saying. I mean, anything could happen here. It still could get much worse. But we're not saying that you're just not going to see the numbers that you saw in 2019 of December of hot revenues and everything like that. Where you had record sales. Revenue and fundamentally support currently contributing S&P returns will be stressing the environment, leaving equities flimsier to the ground and prone to higher vitality, especially in if the gamma is negative. So going back on here, we're going more into the FedEx analysis here. Let's go back here. I'll just edit this out here, Kage, because there's more FedEx news at the top. Okay, we also have a graph here, Kage. FedEx Nukes economy doing fine narrative. Global stocks and bonds lose $4 trillion in a week. That is some heavy news. Tyler Durden writes, while some soft data provided opportunities and narrative writers to suggest remains hard this week, that's not pretty. The Atlanta Fed is to slash the Q3 GDP outlook, and macro surprises X survey tumble to the weakest of 2019. So there you have the chart in the hard-hitting data, and you just have a complete kerplop. Do you know what's funny? The shills in the alphabet media are still saying everything is okay, Kage. They're still saying where they're going to pull it out, that there's going to be some miracle mile here. And if FedEx is saying this is not a good thing. This is showing that it's going to be interesting to see more of Amazon's numbers as well. What's going to be their take on their angle? Because they're part of this, just like FedEx.
I would say that Amazon itself as a system is a good idea, but when things are going to be downturning and whatnot, people are not necessarily going to be on their computers shopping for Christmas gifts as much. They're going to be more frugal.
I'm just looking as far as at their retail side. They're dominant in their data migration and things like that. So that's not good. This part will that'll keep them afloat for sure. But as far as I'm just interested to see their statistics where they're at as well, because that would give a good take of where we're going economically as well. Powell reiterated the position that the inflation is a priority, and even if recession is enabled, that sent inflation fighting to the rate hikes, expectations soaring this week, and the subsequently recession fighting cut expectations soaring too. So speculation here. just like they did in 2008. If you see FedEx come out saying that they are suspending contributions to 401k, then you know FedEx has a problem, wouldn't you say, if they came out and announced that, say 2 or 3 months down the road? Then you would know
it's copium for them. It's copium.
Mm-hmm. If they do that, then you know there's big problems in the economy. That's all I'm saying, is that if they go back to what they did in 2007 and 2008 and 2009, where they suspended that, because they're good at cost cutting with what they have. Unfortunately, I know from inside information there from that. And then the CEO last night said global recession was underway, and it bodes very poorly for the PMIs. All of which stole out of a jam the global peak inflation. Fed will pivot narrative that bid stocks and bonds up fewer this week, wiping out almost $4 trillion in wealth from debt and equity markets worldwide. And Zero Hedge Tyler Durden tweeted, the biggest destruction in shareholder value since the global financial crisis equals strongest economic recovery in recent history. Goldman's Chris Hussey noted the late day that this week saw stag and stagflation show its teeth. Stagflation has been a market concern for a year, and now investors have started to realize that the last summer that the Fed needed to raise interest rates fairly aggressively to stave off persistent inflation impulses. I just think all over the board, Kage, they've got too many holes to plug everywhere. Between they got the border crisis, they got Ukraine, they've got this crisis, they got that crisis. The chicken's running around with its head cut off and just doesn't know where the plug. The Titanic is sinking, basically, is what I'm saying.
Yeah, it's death by 1,000 cuts.
Mm-hmm.
Death by 1,000 cuts.
It looks like demand has actually declined. Companies lay off a lot of workers, and the economy slips into recession. And arguably, the worst outcome could be the tightening regime could come in a growth of decline, but for whatever reason, inflation does not recede. So-called stagflation economy has not been seen since the 1970s. And do you think the younger generation, are they ready for that? Could they handle that with so much cheap credit available before? How are they going to handle this with rate hikes and things like that? You can't get stuff on the cheap anymore. It's going to be done.
I don't know what to tell the next generation. It's going to have to figure out a way to deal with it themselves. I mean, I wasn't necessarily in charge of policy of what brought us to this point, but the only thing I can do is offer my hopes and a little bit of help for them down the line, I guess. But this is their world to inherit.
And we can come on here and have all the happy talk and talk about stocks this week and everything like that. We didn't cover too many stocks and everything like that because you need to know this. You need to know this information. You need to know what's going on. You choose to ignore it. You choose to ignore it. You throw your money in the fire. It is what it is. So this week, however, the camp of investors think the current environment of higher inflation and slowing growth will persist and have grown a bit back to the bad mix of data release. But like I said, Kage, you turn on the alphabets, it's pom-poms and everything out, and everything's going to get back to normal, and we should see a turnaround in the end of next month. I'm not buying it. I don't believe it. I'll go on. I'll put my money in the bank with Cortez and with Peter Navarro. What about you?
That's your call to make. I would probably be more interested in long-term investments and being able to have a return on investment.
Mm-hmm.
But
I'm just saying, I'm sticking with them calling this a sinking ship is what I'm saying. So that's what I'm saying, is that this is a sinking ship. I don't see this coming back. I see more rate hikes in the future, and I also see that the housing market in certain areas the housing market is not gonna do well from these. Obviously, I mean, it's only common sense, state the obvious, but it says in a scenario where unemployment hits 6%, the S&P 500 may dip below 2,900. In other words, there might be a lot more downside in the markets if stagflation persists. Today, they also had the quad which is 3.2 trillion opt-X, not helping the chaos, as the NASDAQ ended the worst week and was almost down 6% right there. NASDAQ's down 14% in mid-August highs. The S&P Dow down 10% from those highs. So you can see that chart. And then it puts the volumes soared this week, outpacing OPEC's with the put call ratio at the same level that marked interim lows in stocks. So some of these little small gains and things like that, where you saw the 300 the past couple months, where you saw the 300 here, the 200 here, is this what we had from what Navarro was saying with the dead cat bounces, like he called?
The dead cat bounce is an interesting term to use, but yeah, he more or less is right for the most part.
Let's go see what Cortez is saying on his feed about his takes for today, just out of curiosity, before we end the show here. So we want to be fair and balanced on here because we don't want to be one-sided. We're going to see what your old buddy Cramer feels like. I know he's the punching bag of Twitter there, so we're going to see what he put there. Key points from Jim Cramer on Friday said that FedEx warning of worsening economic conditions suggests the Federal Reserve is doing better on its inflation effort than expected. It's hard to read this stuff. Mad Money's host comments came as the FedEx bellwether company. The state of economy warned Thursday that the decline in global shipments is impending of a world recession. Cramer on Friday said that FedEx's warning of worsening economic conditions suggests that Federal Reserve is doing much better in inflation effort than expected. This is why you can't read this stuff, man, because it's just comical. What do you think there, Kage, so far?
There's just you can't take anything what they're saying seriously. They've been proven wrong over and over again. I can't remember how many times, but
it's like a religion, and the thing is that people follow this like it's a religion. I mean, he's paid, and he's just saying what it is because he's paid to say it. I'm going to be fair with the guy, is that some of the stuff he says, I actually don't think he believes it. I just think he's paid to say it, and it is what it is. I really do think that. I don't. What's your take? He can't possibly believe. He can't possibly.
There may be some points here and there that may be worth looking into with what he's saying, but then again, you should take what he's saying with a grain of salt.
Yeah, that's for sure. Don't make investment decisions with that as well. If the Fed chief Jay Powell watched our interview last night, he discovered that he's made more progress whipping inflation than he might realize. Maybe Powell will hit us with another 75 base points hike here, and says more time, more measured approach, and assess how things are doing. That's coming next week, buddy. Just letting you know that it's coming next week. The Mad Money's host comments came after FedEx, a bellwether company for the state's economy, warned on the decline of global shipments and a pending world recession. Yeah, because if some of you possibly haven't saw, they're tapping into the stockpile of pork in China. There's shortages there because China's economy is not doing well right now either. It's kind of cracking out there. Stocks closed Friday. Wall Street digested the news with major averaging recording the fourth losing week in the past 5. Cramer also said the previous last week's late earnings, all earnings revenues estimated for the FactSet. That was from CNBC. You have the news of AutoZone right there. Cramer said it's interesting if the company's officials see to the end of the car shortage. Well, probably not. NVIDIA, well, we know what's going on with NVIDIA with the recent stock tumbles. However NVIDIA behaves, you'll get terrifying swift moves down by followed long rallies. General Mills, Salesforce. So this is what he's got. Take it with a grain of salt of everything he's got there. So there's everybody's Twitter punching bag. We covered his side, what he has to say. So we'll just have to see how this plays out. But we wanted to play the FedEx news and give you our take. Things are not looking good on the economic side. Do you have anything to add for this show before we tap out of here, Kage? For more product reviews this weekend?
I've got some plans for this weekend. I'm probably going to try to do a little bit of training this weekend. But nice. Yeah. So, as far as advice for people who are listening in, keep improving your skills, because skills will be weightless, and they will be just as important as your hard resources.
Mm-hmm. And enjoy your night. Enjoy your weekend. Don't make it a dog show. And good night now!